Hello and good day everyone. My name is Nurhaiza Lisa. Today, members of Group 4 will explain on the answer for Chapter 5 Cash Budget Question 2, which is Maria Carey Restaurant. Without further ado, let's get started. Based on Question 2, the budgeted cash sales revenue and budgeted credit sales revenue for the months of February, March, April, May, and June are provided in the question. According to the question, 70% of the credit revenue is collected in the following month of sales and 30% after 2 months of sales. This percentage will be utilized to calculate the cash receipts. Next, as you can see, the average cost of sales in the question was specified as 40% of total cash sales revenue. In addition, 60% of cost of sales paid immediately by cash and 40% of remaining cost of sales paid as subsequent months will be used to calculate cash disbursements. As you can tell, the question has already included the budgeted expenses for the months of April, May, and June, as well as additional information that will be utilized to determine the cash budget. Now, let's understand the additional information given. You can see from the box that we have payroll, rent, utilities, insurance, other operating costs, depreciation, and interest. However, in order to calculate the profit, the depreciation must be deducted from the sales revenue. This is due to the fact that no one has to pay for depreciation and cash payments are exempt from this requirement. As a result, it won't be factored into the cash budget calculation. As for the insurance, it is paid in advance in January on the assumption that it has been paid for the whole year. Since it has already been paid in the month of January, you won't be stating it in other months. Next, the loan requirements are paid at 1,005 every month under cash disbursement. According to the additional information, Maria Carey Restaurant had sold some equipment which was considered as disposable of assets at 8,000 and planned to buy other equipment that was considered as cash disbursement worth 10,000. Last but not least, the semi-annual bonus, which is a half-yearly payment scheduled to be paid in June for 8,000. Now let's prepare the cash budget for the months of April, May, and June. To start off, we must first look at the question to determine the beginning cash balance for April, which is anticipated to be 4,100. Before we prepare the calculation for the cash budget, let us first calculate the credit sales that will be used as a cash receipt and cost of sales that will be used to apply at cash disbursement. That is all from me, and moving on to the next presenter.
Hi everyone, my name is Fatin Sahira. Okay, now let's take a look at the table. We need to begin in the month of February, in which the credit sale is 21,800, where this amount can be taken at budgeted credit sale revenue. After that, we must multiply 21,800 with 70% and you will get 15,260, in which this amount will be collected a month after February, which is March. Meanwhile, the remaining 30% that will be multiplied with 21,800 equals to 6,540, which will be collected 2 months after February, which is April. To summarize, these are the calculations to calculate the credit sales. You guys may refer to the questions in the following months to get the figures. You may also refer to the attached table to check the answer. Now, let's prepare the calculation for cost of sales. Firstly, let's calculate March purchases. March purchases are 40% of total cash sale revenue. This percentage is taken because it is stated in the questions. The total budgeted cash sale revenue in the month of March is 32,800. You must then apply 40% to the 32,800. So the answer will be 13,120. Once you get the 13,120, this amount will then be divided into 60%, which we will get 7,872. And the remaining 40%, which equals to 5,248. The 60% of the purchases are paid right away in the same month, which is in the month of March, and the 40% will be paid in the following months, which is April. To summarize, these are the calculations to calculate the cost of sales. You guys may refer to the questions in the following months to get the figures. You may also refer to the attached table to check the answers. Alright guys, basically these are the working methods that we'll need to do in order to complete the cash budget. That's all from me, and I will pass the floor to my friends.
Hi, thank you Fatin Sahira. So my name is Nur Alfa and I will proceed to the explanations of making the cash budget for the month of April, May and June. So now let's take a look at the table and we will go through it one by one. Mind you to look after the working method of credit sales and cost of sales in order to create the cash budget. Let's focus on the month of April. First step, the opening balance. The figure of 4,100 is taken from the question, which you guys may refer to. And next, for the cash sales of 38,900 is taken from the budgeted cash sales revenue in the month of April. Then we proceed to the credit sales. Under credit sales, we need to put a 1 month and 2 month figure in order to separate the amount of money that will be received in April. As we refer to the working method of credit sales that we have done just now, the amount of 13,160 is taken a month before April table, while 6,540 will be taken 2 months before the April table. And after that, we need to total up the cash sales and the credit sales in order to get the total cash received for sales. And now we move to the next element, which is cash receipt financing. Under the month of April, there is no disposable of assets. However, the equipment that has been sold in the month of June will be applied under the June cash budget. Therefore, you guys need to leave the April disposable of assets empty. In order to calculate the total cash available, you must total up the opening balance and the total cash receipt for sales. Next, we proceed to the cash disbursement element. This element comprises the cost of goods sold, which is cash purchase and credit purchase. Under credit purchase, we need to put a 1 month figure which the amount of money has been credited a month before April. As we refer to the working method of cost of sales, the amount of 9,336 is taken from April table cost of sales. Meanwhile, the credit purchase of 5,248 is taken 1 month before April table cost of sales. And then, we need to total up the cash purchase and credit purchase in order to get the total cash disbursement for the cost of goods sold. The answer will be 21,950. Thank you everyone, then I will pass the floor to Jemima.
Thank you, Alpha. My name is Jemima and I will proceed to the next explanations. We will move to the operations under cash of disbursement. For this part, you need to refer to the question under other budgeted expenses. You need to list all the budgeted expenses except for depreciation. In order to get total cash disbursement for operations, you need to total up all the expenses mentioned in the question, such as payroll, rent, utilities, other operating costs, and interest. Move on to the financing activity. Under financing activity, there is loan repayment, new equipment, and employee bonus. For the loan repayment, it will need to be paid for all months including April. Therefore, the figure of 1,500 is taken from the additional information. In the month of April, there is no equipment and employee bonus has been included. To sum up, the total cash disbursement for financing remain 1,500. The second last step is to calculate the total cash disbursement, which will be total up from the amount of total cash disbursement for goods sold, total cash disbursement for operations, and total cash disbursement for financing, which equals to 38,034. At the ending cash balance, you must deduct total cash available with total cash disbursement and you will get 24,666. This amount will be carried forward to the following months as the opening balance. The calculation in the month of May will be the same as the calculation in the month of April. The difference in the month of June is that Maria Carey Restaurant sold some equipment and bought new equipment. These information and figures can be taken from the additional information in the question. The amount of 8,000 is categorized under disposable of assets in cash receipts financing element. The amount of 10,000 is categorized under new equipment in the cash disbursement for financing element. At the same time, in the month of June, there is 8,000 of semi-annual bonus scheduled to be paid, which will also be under the cash disbursement or financing elements. Once completed adding the additional information of the month, you may total up the ending cash balance. And that's it. You have completed the cash budget. Thank you.